I think that there is a very high probability, I'm going to say maybe even 50%, that Ethereum's network value will flip Bitcoin's.
Wow.
Like when?
The flippening.
Maybe in a couple years.
Maybe both.
I think Bitcoin's
Okay.
going to 1 million, but I'm saying like Ethereum's relative size, the ratio will actually be 1-to-1. And then Ethereum itself is only at 4,000-ish. But if it flips, you know what I mean? Like, so Ethereum has a lot of upside. We're not moving the price of ETH. I can assure you.
Tom Lee believes there is a strong chance, perhaps close to 50%, that Ethereum's network value could eventually surpass Bitcoin's. While he still sees Bitcoin potentially climbing toward $1 million per coin, he argues that in relative terms, Ethereum could catch up and even reach parity within the next couple of years. Lee highlights that Wall Street is paying serious attention to Ethereum due to its ability to streamline financial operations, making them faster, more transparent, and easier to audit than traditional systems. He points to initiatives like the SEC's Project Crypto and the recently introduced Genius Act, both designed to encourage greater adoption of blockchain within institutional finance. For Lee, this moment mirrors 1971, when the U.S. abandoned the gold standard, forcing Wall Street to create new mechanisms to move dollars efficiently. Today, Ethereum represents a similar transformational breakthrough, only this time for the digital asset era. Notably, Lee stresses that institutional players aren't directly trying to pump ETH's price. Instead, they are accumulating ETH quietly while enhancing shareholder value through stock buyback programs that are partially funded by Ethereum's yield. This creates a structural shift. Each share of specific companies is now backed by an increasing base of ETH holdings, ensuring that stock prices aren't inflated by hype but instead supported by underlying digital assets. For Lee, this alignment of institutional adoption, technological innovation, and financial engineering is why Ethereum could be on track to overtake Bitcoin in network value. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Ethereum, number one, is where the stablecoin boom is taking place. 60% of it. So like this whole Genius Act, Besant says stablecoins are going to go from 250 billion to 4 trillion. That's an exponential demand growth for Ethereum.
They're replacing money market funds.
Correct. And it's dollarization and all that. Ethereum pays a 3% native yield if you stake it. So the 6.6 billion held of Ethereum is over $200 million in net income right now. The day we turn on staking, not only is there no debt on Bitminer, it's going to pay you $200 million a year in dividends.
And what do you do with that? Buy more Ether?
Or we might just pay it out as cash dividends. Yeah, so we're working with the Ethereum Foundation because we can explain to them what Wall Street's looking for. So keep in mind that the Genius Act and then SEC's Project Crypto is the recognition that using blockchain makes Wall Street faster and more efficient. I've seen it at Bitmine because like when we get the cash, the minute it touches the blockchain, it moves we have much better visibility and it's much easier to move, to actually track the money. The wallets are all tracked. And this is like 1971 because in 1971, the dollar went off the gold standard.
Yeah.
And everyone said, oh, I'll buy gold instead. But remember, the dollar suddenly became a fiat.
Yeah.
And Wall Street innovated because they said, now we have a dollar. Let's make sure we can move the dollars efficiently.
You don't need to move bars of gold to match the movement of the dollars.
Correct. So it created Wall Street, came out of that single act in 1971. So now, 2025, Project Crypto from the SEC and Genius Act is saying, Wall Street, take advantage of this new technology to make Wall Street a tech industry. But they're all choosing to do it, or the majority are choosing to do it on Ethereum. Ethereum is a smart contract platform and has what they call EVMs, Ethereum virtual machines. So you can do basically a lot of smart programs and contracts. That's where Robinhood is doing their stablecoins, the tokenized products on top of Ethereum. I mean, keep in mind a couple of things, because I can't tell you too much about the operations. We're not moving the price of ETH. I can assure you.
No, but the announcement of you being involved got other people to buy ETH.
But I'm just saying like in a practical sense, because when we're actually in the market, I don't think we've ever done an outbid.
Okay.
So I can't explain what we're doing.
You're cleaning up sellers? People that are selling,
I have
to
be very, I can't tell you how we're buying but we're buying, ETH tokens, but we're not, we got it.
Yeah.
Got it. And secondly, just to keep in mind, like we have a $1 billion buyback program in place. And with this native yield from ETH, we could be buying back the
Buying
shares.
back the shares, not more ETH, but the actual
Yeah.
stock.
That's right.
Okay.
So like, in other words, like we have an internal mechanism to protect shareholders, but shareholders aren't being hurt in the sense that there's $35 of ETH. Well, last week, $35 of ETH held per share supporting the stock price, which means we're not trading at a premium, especially considering the growth of that Ethereum held per share. It's growing like 50 cents a day or something. And then Ethereum itself is only at, 4,000-ish. But if it flips, you know what I mean? Like, so Ethereum has a lot of upside. And
Are there other tokens out there that this idea makes sense for? Is that something that you guys are thinking about?
I think if something is useful, like, because Ethereum has this whole story of like Wall Street going on to the blockchain. That's makes it more useful. But remember, the AI world, the agentic world, where when you have robots, you have to now know proof of human or proof that this is a valid instruction sent to the robot. They're going to have to build a token model, which is right now, most of that's happening on Ethereum. So the AI world, as they go to agentic, has to use tokens on a public chain. And it looks like a lot of it's going to happen on Ethereum.
Tom Lee notes that the speed of the market's recovery has surprised many investors, leaving them unprepared. In April, when economists began warning of a 60% chance of recession, it acted almost like a sell signal for stocks. A wave of investors panicked and moved to cash, expecting a downturn. But when markets bounced back without any significant pullback, many were left on the sidelines, unable to re-enter. For Lee, this highlights a common behavioral bias. People often follow the consensus instead of relying on their own independent judgment. When they see prices rising, they assume it's simply dumb money fueling the rally, which prevents them from participating in strong uptrends. To illustrate, Lee compares this to how certain high-growth stocks were once perceived. Companies like Tesla, Palantir, or Netflix initially carried the reputation of being retail favorites, overlooked by large institutions. It wasn't until their growth became undeniable that big investors began paying attention. He recalls how one major hedge fund, when first deciding to evaluate Tesla seriously, had to hire a small Oregon-based research shop to write a detailed report. That call to New York was the first time the niche firm had ever been asked to consult on such a scale. Lee argues that this is how major market shifts often begin, not with the mainstream but with a few investors who see opportunities others dismiss. Let's get back to the interview.
I'd say, number one, just for people to place themselves like in history. So if you had a fact pattern of 20% gains, and then the third year's up 10 already, and maybe we'll be up 15 or 20 this year, then we're in a bull market. Like, so whatever.
What do you mean? Then you have confirmation that it's a bull market?
Yeah, because this never happens in a bear market. You can't have like
Well,
a
no
dead
shit.
cat bounce that lasts
Right.
36
You
months.
can't have
Yeah.
bull markets and bear markets.
Yeah. But then they should then place themselves in history. This is probably more of an early start of a bull market.
I hate it.
This one
Yeah.
this one has been particularly reviled, I think, because one, the speed of the recovery has been so fast. As you know, many people rage sold in April because they're like, look, the economist told me 60% chance of recession. That's the same as a sell rating on the stock market. And they went to cash. They couldn't redeploy it because there was no pullback.
It was too fast.
Yeah. And I think it just shows you that people don't operate with independence. They operate with a bias. They think when something bounces, it's just dumb people buying, and that prevents them from jumping on with the buy. I mean, think about Palantir and Tesla, Netflix, they were all like retail stocks. Like someone was telling me the first time that they tried to buy Tesla institutionally, they had to bring in this like research firm from Oregon that wrote a report on Tesla. Okay. This is Jennison.
Yeah.
And like, that was the first time that research firm ever got called to go to New York to actually meet a hedge fund.
Oh, wow. Okay.
So like, all the really big churns come because someone recognizes it, and it's not often like the crowd that recognizes it. I've started off my career as a stock analyst. Okay. So imagine we have a stock. Okay. Let's call it, XYZ. And we shot it full of holes. Like they should have been kill shots 6 times, right? Because every one of those was a kill shot for this bull market. And yet this thing.
What are the things? The inflation cycle.
Well, for COVID, number 1.
Fastest Fed hikes in history.
Yeah. And then the bullwhip chain effect was number 2. The fastest Fed hikes. Well, the fastest inflation cycle in history, the fastest Fed hikes in history, the Trump tariff shock, and then U.S. bombing Iran's nuclear
Each of those should have produced a bear market.
Yeah, should have killed the bull market or
Right.
even killed the economy.
So what does that?
Yeah, so let's say that this stock was 16 times and we shot it 6 times over 5 years, like just kill shots.
Yeah.
And it grew earnings every year.
Yeah.
We would say the PE has to go up a lot.
And it hasn't.
It's actually lower. That AI is the most important driver of the global economy. Okay. But where I think people make an inference mistake, okay, is that a theme driving the global economy has been systematic to the global economy since capitalism
It's
was
always
started.
this way.
Yeah, there's always been an industrial revolution.
Okay, fair.
And even in the 80s, the retail sector was the best group for 20 years because boomers were entering the women were entering the workforce, and there was a baby boomer thing on retail stock. So that was a single theme of demographics. And like the internet boom was a singular thing of actually creating digital infrastructure. So like it's always been a story of the stock market.
The price of Bitcoin and other cryptocurrencies rose on Friday after Federal Reserve Chairman Jerome Powell signaled the possibility of an interest rate cut in Jackson Hole, Wyoming. Within 15 minutes of Powell's speech starting, Bitcoin jumped above $114,700 from $112,000, a nearly 2.5% gain, while Ethereum surged to $4,600 from $4,300, an almost 7% increase, according to crypto data provider CoinGecko. Both cryptocurrencies remained down 2.9% and 1.4%, respectively, over the past week. Momentum in digital assets is increasingly shaped by the intersection of institutional adoption, policy signals, and shifting investor psychology. The structural accumulation of Ethereum, alongside its expanding role in financial infrastructure, suggests that market leadership may not remain static. Meanwhile, macro catalysts such as central bank policy continue to act as powerful short-term drivers of volatility and opportunity. Together, these forces are setting the stage for a new phase in which both technological utility and monetary policy will determine how value is distributed across the digital economy. What dynamics could ultimately decide whether Ethereum's expanding financial role allows it to rival Bitcoin's dominance, or if Bitcoin maintains its lead as the market's primary anchor? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.